We want to take a look at New York Community Bank one more time here. It is down a clean 25% at the moment on news that there's been a shareholder lawsuit filing in Brooklyn court at the moment. And the filing refers to what happened last week. This is the intraday picture, but if we can stretch this out over to a week, you will see that this horrific slide began last Tuesday when the company missed on earnings, chopped its dividend, and cited loan loss exposure to commercial real estate that is on its books. Yeah, this is not a pretty chart. We're watching it closely. And earlier today, the Treasury Secretary said that regulators are keeping an eye on the situation. All right, let us turn to real estate of a different kind, but commercial nonetheless. Is Adam Neumann on a rampage to wrestle his old job back? The founder and former CEO of WeWork, who was ousted after his profligate spending on partying and private jets, is trying to do just that, apparently. In a letter to WeWork sent on Monday, lawyers representing Neumann claim he's partnering with Daniel Loeb's hedge fund, Third Point, to regain control of the company. Third Point confirming only that it's had conversations with Neumann but has not committed to a partnership. Neumann has reportedly met with Third Point and Softbank, and this happened back in October. But working with Softbank would mean trying to win over this Japanese hedge fund that WeWork terribly bruised, considering Softbank already sunk $16 billion into the venture. Are these investors not doing their due diligence? And we're talking about if Loeb were to partner with them. Or is there potential here in buying something out of bankruptcy? Kevin O'Leary is chairman of O'Leary Ventures. Kevin, you know a lot about buying companies, sinking money into them, doing due diligence. First on Fox Business, I want your thought on whether it's Daniel Loeb or Sequoia, who has backed his newer venture called Flow, if they're making a big mistake on this guy, or give him another chance.
I doubt this deal happens because of SoftBank's experience. It's hard to lose billions in the collapse of what WeWorks was at that time, and then back the same guy that made you take that mark-to-market hit. Other LPs, other investors in SoftBank probably wouldn't like that. So politically, it's probably not a smart deal. And by the way, WeWorks is just another real estate play. And the challenge there was they bought long-term leases from all kinds of buildings in every city, notably New York is where a lot of the trouble started. And then every single WeWorks rental is a very short-term lease. And so you have a huge mismatch, much in the same way that idiot management is driving down these regional banks. They're not bad people. They've just never experienced what it's like to go through high rising rates. In the case of WeWorks, they got wiped out by the pandemic where nobody went anywhere for, 24 months. But do I think that he'll get back the CEO-ship of WeWorks? No, I don't think there's a chance of that happening. This is just a garden variety bankruptcy. You have to realign the debt. It's almost a boring deal now because there's nothing proprietary about what WeWorks does. There's all kinds of rentals for property and shared office. I mean, who cares is what I'm saying.
Well, OK, but I'll tell you, a lot of people, let's just say people who have bona fide businesses and are dying for venture capital are scratching their heads saying, how does this guy get $350 million from a venture capital fund in Silicon Valley to start Flow after he took a $47 billion company, which was WeWork, down to bankruptcy, $4 billion? People are just flummoxed by this. I mean, how important is it when you're putting money into a company to look at the founder and see what they're really doing on a regular basis?
Well, Liz, it's interesting you bring that up, and it's a great point. Some of the greatest entrepreneurs didn't make it on the first pass. They had one or two massive failures that really gave them motivation to get it right at some point, because the sting of failure is very motivating. It doesn't mean he's not a good entrepreneur. It's just the one that he associated himself with SoftBank. It's going to be very hard for them to be cooperative in putting back in the CEO-ship. I don't see that happening, but it doesn't mean that he's a bad entrepreneur. Now, by the way, when he addressed and got this new money, it was at a time when there was lots of liquidity in venture capital. Venture capital is down almost 40% in the last 24 months because of rates going up. So it's not very easy to raise new dollars. Most VC firms, even the giants like Sequoia and others, are trying to look at their portfolios and deciding which ones will they back and which ones will they let die.
Of course, yeah.
This is not a great time for venture capital. It's a very difficult time, and we really haven't seen the liquidity yet. So if you're raising money, it's very, very, very tough out there. You're better to go look at equity crowdfunding. That's flat on the year. Companies like Start Engine and others are actually raising money, but not 300 million at a time, more like 10, 20, 30 million at a time.
Let me get your thought on the Bitcoin ETFs, the spot Bitcoin ETFs finally blossoming after the SEC said, okay, fine, we will approve this. This brings up FTX, another entrepreneur that a lot of people poured money into, and then that imploded, you included. But I'll tell you, you look at these, are there any one of these, because there were 7, I think 7 that were approved. Any one of these that you put your money in right now?
No, I wouldn't use an ETF and pay anywhere from 38 basis points to 1.5%
right.
To hold Bitcoin. I mean, why pay the fees? It makes no sense. It's great for a retail product. It's great if you want to put a little Bitcoin into your stock portfolio, because you can buy it as if it's a stock. But it makes no sense for institutions to use these vehicles. And I don't think all of these are going to survive. I would think maybe 2 or 3 will make it. Probably ones like Fidelity and BlackRock, where they have massive sales forces. The rest are going to die because they just can't keep up in the ability to sell it. But ETFs are not a good institutional product for Bitcoin. You need an exchange that isn't being sued by its regulator. So right now, a lot of these are using Coinbase. But if you're a big institution, you don't want to use Coinbase because they're still in litigation with the SEC. The more likely outcome, including Binance, which you brought up, and FTX, which is gone, they're bleeding. Binance is bleeding assets like crazy because, of course, there's litigation not settled yet with the SEC, and indeed, CZ, the founder, is on his way to jail. The new play there is the compliant M2 exchange in Abu Dhabi, which is setting itself up to gather all those assets in a compliant run by the ADGM and sovereign wealth funds. That's probably the next play. That's where I'll go, because I can feel safe putting assets there. It's the safest place to put money, and I'm not paying stupid ETF fees. I mean, why would you ever hold Bitcoin in an ETF?
Yeah.
I don't get it. But if you're only going to put a couple $100 in it, sure. But most of that money is retail. I'm not saying it's a bad thing, but it's not an institutional play. And institutions are not going to buy Bitcoin till Gensler's finished suing everybody about it.
Exactly. And as Buffett would say, beware the fees eating up whatever gains you got. Kevin, Mr. Wonderful, come back in studio. Bring your fancy watches. It's great to see you.